It's so funny. I don't get called an optimist all that frequently until I come on this show, but the consumer is still stable and consumer spending makes up two-thirds of GDP. Now, that's not to say there isn't a hairline fracture in the glass. I think we're starting to see a little leakage maybe out of that glass half full. The one metric I'm watching very closely is inflation adjusted incomes are tentatively rolling over. But our consumer, they're still on stable footing. They have, almost record high assets, net worth still holding up. So we do see those wealth effects. But for a more immediate spending perspective, we still have access to credit. So there are other levers that the consumer can be pulling.
Inflation, is the decline in oil, does that take the inflation risk out of this economy?
It does not take the risk out completely. I think that's going to help us in the near term. Some normalization in oil prices, that's been built into our forecast. However, we are still expecting to see rise in the CPI. We've already seen this upward movement for over a year now in the PPI. So consumer goods inflation is very likely to track behind that PPI inflationary environment. Really, we see these drivers as fairly broad-based, nowhere near as acute as that immediate post-COVID timeframe. We really go through some of the key fundamentals here from how much stimulus is being done today. Yes, that's going to be inflationary, but nowhere near as inflationary it was as in 2021. Same thing with the money supply. Same thing even with these supply chain issues, things like oil and other petroleum-based products. This is not the golden screw problem that we saw in the early 2020s, but this is a hotter than baseline inflation experience. So I think businesses and consumers, they need to take on a different mindset going forward.
Describe the core X shelter series Lauren Saidel-Baker looks at. Which inflation series should we study if we want to take out the madness of shelter and rent in Boston and across America?
Man, the shelter and rent component, that is astounding to me. We're still seeing that rise there, really, despite some dislocations in that housing market. But for the average consumer, I know we think about food and energy costs so much. Just we go to the grocery store, right? We see the price of gas at the pump. It's really the other side of the equation that I'm watching, though, is the service sector. Wages are still elevated. We have a tight labor market. It might not feel like that for everyone out there, but if you look at the numbers on balance, we have limited labor availability with our aging population, more baby boomers retiring than Gen Z workers entering the labor force, and with very low, even net negative immigration numbers. That's not going to support a broadening in the labor pool, and that's going to keep upside pressure on wages, which in turn is flowing through to the service sector. I don't think that one gets nearly enough attention.
How about the consumer in general here? Consumer spending seems to be holding up. I know the K-shaped economy has nuances to that analysis. How do you think about the consumer these days?
Yeah, for me, this all comes back to the K-shaped economy. Really, it's middle to upper income earners that are doing the bulk of our retail spending out there. So the other prong of that challenge, really, as we look at something like retail spending, is we're looking at these numbers on a nominal basis. And with higher inflation, well, we could be buying the same basket of goods, but it just costs more today. So pricing is helping us out here in terms of those net kind of nominal numbers. If we do deflate retail sales, the growth rate is a lot lower, still just about 1%. So it's tracking in there on real volume gains. I don't think the consumer is in such dire straits that they're cutting back. They're really just allocating their budget differently. And I don't mean in terms of oil or gas versus other kind of necessities. I'm really talking about, do I buy the store brand or the brand name? Is there something that I can go slightly longer without, right? Stretch out the time between those purchases. It's going to be kind of that money saving, belt tightening mentality, but not the ultimate shutting down in what we're purchasing.
So if you write 12 pages of a June 30 forward view for ITR, what's your most difficult paragraph to write? Where's the greatest Lauren Saidel-Baker uncertainty?
The big question we have, again, it goes back to just how the consumer can be funding these purchases. As I said, lenders are really showing credit availability out there. It's easier to get loans. we don't want that to be the one leg supporting our consumer. So if we do continue to see this decline in real personal income, that's where I'm going to personally get a little bit more nervous. Again, things like wealth effects. My home is worth more now. My stock portfolio has been doing great. That feels good. We have the wealth effects mentally, but that is not going to the grocery store for me, right? That's not putting fuel in the gas tank. So the longer this goes on, the kind of greater duration of this trend, that's when we will start to see some of those choices get a little bit more acute for the consumer.